Hey everybody, it's Chip again. Just wanted to get back with you on economic data and housing market updates as I see it here on May 5th, Cinco de Mayo in 2023. And wanted to get back with you on the fact that I have been preaching for the last 2 years about jobs and jobs being key to the resiliency of the American economy and probably keeping us out of recession for a year now, and holds true. Jobs report came out today again here in May. Over 250,000 jobs created last month, which is incredibly strong based on the negative news we continue to hear every day in the media, from an economic perspective, from a banking perspective, technology perspective. We hear of a lot of layoffs going on in the technology sector, specifically in California and elsewhere. But when you're adding 250 plus thousand jobs in a month, the unemployment rate back to the record low of 3.4%, basic full employment in the United States, that's a great sign. And not only are jobs being held and created and hired for, but wages are increasing too. So all great signs for the economy, and all signs that the Fed does not want to see, because the Fed wants to continue its battle against inflation. And in its mind, and factually so, a strong jobs market, a strong wage market, a strong economy does not help lower pricing at the grocery store, does not help lower pricing at, when you're buying clothes or anything, tires, wood to build homes with, things like that. So they're still trying to fight the inflation monster. However, I'll say this, they did raise rates a quarter basis point again at their last meeting last week, which surprised me, frankly. I thought they would put a pause on it, on rate increases. They've indicated after that increase that they're probably going to take a pause and take a break, which I hope they do, please. So rates continue to rise to fight inflation. However, I still say that they need to give it more time for those rate increases to take hold and impact the economy. It's just such a slow motion to turn that big ship, and they need to give it time to make the turn that it needs to take. And raising rates again and again and again are just going to eventually bite us in the rear end. I would predict that it will anyway. So rates went up again. I hope they put a pause on it for the rest of the year, because I have a feeling that by the end of this year or beginning of 2024, they're going to want to start lowering rates and doing quantitative easing, basically to help boost the economy back up, because I think inflation is going to go away at least to a moderate amount over the next 12 months. And we're not going to have this inflationary issue. I think we're going to have a recession issue, and then they're going to try to pull back those rate increases, hopefully not too quickly, but at a good pace. So keep an eye on employment. Keep an eye on these jobs numbers every month, because as long as they maintain or grow pretty significantly like they have, 3.4% unemployment, until we hit 5 or 6% unemployment, it's hard to even imagine a recession. However, everybody seems to think we're going to have one towards the end of this year, and I do too. I really do. I think that some things are turning. Things are going to turn, and that's a big ship to move to in the negative direction. The banking sector is a complete unknown to me in terms of its viability and stability. And I know we keep getting the lip service from Janet Yellen and Jerome Powell and other powers to be that the banking sector is strong and sound, and I'm sure it is in most cases. However, there are going to be some regional banks and smaller banks, I think, that feel a huge pinch on the cost of their capital. And as the cost of capital increases, which means basically they're borrowing money at a higher rate to lend back out to you and me, or they're taking in deposits and they're having to increase the rates they're paying to their depositors, because that counts as capital that they can lend out to people who need loans. But if they're paying 4 or 5% for an interest on deposits, like certificates of deposit or things like that, that are time deposits, meaning they stay on the books for quite some time, then that's a high interest rate to pay out to consumers when they're trying to battle for loan rates around 6 or 7%. There's not a lot of margin there. So I think smaller banks and regional banks are going to get pinched by that. I don't have any clue or don't pretend to understand the derivatives market and all the other ancillary investment markets that banks participate in. So I'm not going to comment on that, other than to say that those are the markets typically that bite the banks in the butt too when the economy turns. So just keep an eye on that kind of stuff. Again, the banking sector is an unknown for me for the most part in terms of its stability and its ability to fight off any real negative impacts in the economy. But as far as housing goes, which I do know about, it is still the strangest market I've ever seen. We have buyers out there, we have some sellers out there, but not enough sellers. So just like over the last 3 years, we've got more buyers than we have sellers. We've got low inventory of new housing coming on the market and new and existing housing coming on the market. So we need more inventory. We've got buyers to buy those houses. If homes are in great condition, in great locations, and are priced correctly, they're still getting multiple offers and getting, taken off the market within a week, sometimes within a day. And that's a good thing. If houses are not in very good condition, if they need some work, if they're in a not as desirable location from a school's perspective, or on a busy street, maybe people don't want to live on a busy street, or if they are overpriced, even if your house is immaculate, if it is overpriced in this market, consumers are stepping back from that. They're wise. They're wise to it, and their agents are wise to it too, and advising them not to move forward with overpaying for a house. So, all that being said, is if you're listing your house, just make sure you price it correctly, and it'll sell. Do the things you need to do to get the house into condition, sellable condition, to move it on to another family or person, and your house will sell. Hopefully it's not in the median of Interstate 40, and if it is, then it might have a hard time selling it. But other than that, good condition, good location, priced correctly, you're in great condition to sell your house, potentially with multiple offers. So keep in mind the economy, recession, housing, banking, jobs. Those are all things that we'll continue to talk about over the next course of the year, and hopefully we'll have good news moving forward like we did last month with the jobs reports, and still no recession. We're in a housing recession. We've been in a housing recession for at least a year now, but we're not in an economic recession, which is a great thing overall. So keep inflation moving down, keep rates where they are, please, and we'll see you next time.